So if you're trading crypto, you're probably making at least one of these 5 mistakes and it's costing you money. But don't worry, because by the end of this video, you should be able to identify and fix those problems. So let's get into it and see what they are. So the first mistake people often make is trading without a plan. They jump in emotionally, buying the top of pumps and selling the bottom of dumps, which is obviously not very profitable. Now, what you're going to need to do is come up with your own trading strategy if you haven't already. And that's going to include your entry conditions for a trade. Now, whether that is using indicators such as fair value gaps, Fibonacci retracements, moving averages, or simply market structure, range play, etc. It's completely up to you. If all of that is a new concept to you and you're just starting out, we have a full course, full trading course on our YouTube. So I'll link that at the end of the video. Go check that out if you need to. But not only that, it's going to, your trading strategy is obviously going to include your stop loss and invalidation for the trade, and then where your target and TP is. So once you've got your entry conditions, your stop loss and invalidation, and your take profit targets, that's your plan. And you obviously want to plan the trade and then trade the plan, not deviate from it. Now, as an example, if we go back to the charts, this is a trade that would fit my trading strategy. So my trading strategy is based around momentum, and I mainly use the moving average 21 and the RSI 50, as well as confluence with fair value gap. So essentially, if price is below the moving average 21 and below the RSI 50, I'm looking for shorts. If it's above the moving average 21 and above the RSI 50, I am looking for longs. And as I say, I use fair value gaps and market structure, support and resistance as confluence for those things. So as I say, this is a potential short that I'd be looking at during or as part of my trading strategy. The reason being, obviously, we're below the moving average 21, we're below the RSI 50. We have also closed below this previous daily level support at 84,250, and we have this daily bearish fair value gap up here as well. We've tried to break above it twice, on Friday and yesterday on Sunday, and we have failed to do so. So there's clearly weakness in the market and momentum is to the downside. So my entry would be in and around here. My stop loss slash invalidation would obviously be above these wicks and above the daily fair value gap. And then my target would be down here at these candle bottoms just there. So not a bad little trade, and gives you an example of what a trading plan looks like. So the second big mistake people make is ignoring their risk management, which is obviously a huge part of your trading strategy to ensure that you don't blow up your trading account. So what a lot of people will often do is they'll take big losses in 1 or 2 trades, end up revenge trading, trying to make it all back, and over leveraging and essentially blowing up their account. Now, the best way to do this is to stick to a 1 to 2% risk per trade of your trading account. So an example of how to do this, nice simple one down at the bottom here. So let's say you have a $1,000 trading account. You'll place $100 on each trade. Your stop loss would be at 10% of that. So whether you want to use leverage or not, essentially losing 10% of that $100 if your stop loss gets hit. Obviously $10 is 1% of that $1,000 account. So if you lose a trade, you're only going to lose 1% of your trading account. And obviously that is going to keep you nice, healthy, and safe. So what you want to work out on each trade as part of your trading strategy as well is your R&R, your risk reward. So how much you're willing to risk, and then how much reward you're going to get if you hit that target, that TP. Now, you can actually put this into the exchange and it does all the work for you. So I'm using BitUnix at the moment, open to UK users. It's obviously quite difficult at the moment to find crypto exchanges that you can use leverage on for UK users, but this one you can. So let's say you're going to have an order price of, let's say 83, or let's call it 84k. Price is actually moving quite a bit as I'm recording this video. You can have your quantity in BTC or USDT. That's fine, but the thing I want to show you is that you can tick this TP and stop loss section here, and you can actually change this to ROI percentage. So let's say you're working with a risk reward of 3 to 1. So your stop loss, as we mentioned earlier, it's going to be 10%, minus 10%. That's going to show you the trigger prices, whether you're going to go long or short, which means you're going to lose 10%. And then your TP, let's say you're going for a 3 to 1, so you'd go 30% ROI, and again that gives you your targets there. So nice easy way of figuring out your R&R and keeping that risk management intact. So the third mistake people make is not understanding market structure. Now, we've got a separate video on this in a little bit more detail in the comments below if you want to go check that out. But essentially what you want to do is you want to go on those higher time frames, weekly and monthly, and possibly even the daily, and figure out what direction the market is traveling in. Essentially, there's only three options. We're either in an uptrend, a downtrend, or we're in a sideways range bound environment. So as the saying goes, the trend is your friend, and you don't want to go against that. You want to try and go with the momentum. So let's go and take a look at the charts now. This is a little bit simplistic and a little bit crude, but essentially, as you can see, these are sort of the three phases of the market. We've got this big uptrend here where price is going up, and you don't really want to be trying to short that. You want to be looking for longs, so either jumping in on breakouts or on pullbacks. At the top here, we saw a range bound sideways market. Now, of course, you can get longs and shorts within this area, but you obviously need to know how to play a range. Essentially, getting long at the range lows and short at the range highs. And then, as you can see, since around the end of February, we have been in a downtrend where shorts have been the play. Now, again, you can get these counter trend bounces, but essentially the momentum is to the downside, so you want to try and be looking for shorts as the odds are more in your favor. So mistake number 4 is something we touched on a little bit earlier, which is FOMO trading, or chasing the pump. So what you want to be doing rather than FOMOing in is waiting for retracements into levels of support, so market structure or Fibonacci retracement levels. So let's take a look at the charts and show you an example of that. So as we were just talking about market structure, this is the area we were talking about before, about it being a raging uptrend, and you want to be trying to identify long. So the way you do this without chasing the pumps and buying tops is you would identify previous levels of resistance which could be turned into levels of support. So as you can see here, previous level of resistance at 57k, we closed above it. Now you don't want to chase this pump and buy up here at 60k, wait for price to come back down, retest that level, holds as support, and up it goes. Again, had nice confluence with the moving average 21 and actually the RSI 50 as well. Then you get this second pump, which tops out around 66k. Again, you don't want to be jumping in on there. You want to wait for a pullback. You do get this pullback back to the top of the previous pump, which was 60k. Again, gives you two nice entries there. Up to another high, which is 69k. Again, you don't want to be jumping in up here. You want to wait for a pullback, which you do. And where does it pull back to? The previous top of the last pump, which was 65k. And again, nice confluence with the moving average 21 as well before it goes up, makes another high up here at 73k. Again, you don't want to be jumping at 73k, wait for a pullback, and it actually pulls back to around 66, 67k. Now, as well, you can use a Fibonacci tool, as we mentioned. So if we just grab that and go from the lows to the highs, so this example here, nice pullback into the 382. If we use it for a fresh one up here, so let's go from the bottom of this rally, not that one, down here, up to the top of this one, you pull back into the 786. So nice little area there. So the three most popular Fibonacci retracement areas, the 0.382 is for very strong uptrends, and then for deeper pullbacks you normally want to aim for the 618 or the 786. Now, whether you want to put bids on those areas to fill as they come down and then go from there, or whether you want to see where those areas hold and then jump onto the trades, completely up to you and down to your trading strategy. But of course, much better to be looking for pullbacks in an uptrend rather than jumping in at the top. So as we can see here, whether you use market structure or Fibonacci retracements, much better to be getting in from lower, not only from a risk reward perspective, but also because you feel a bit silly when you end up buying the top. And finally, mistake number 5 is overtrading and emotional decisions. Now, we've already touched on emotional decisions when we talked about FOMO and in and risk management. Now, you might be overtrading due to that, or you might be overtrading due to the fact that you might be new to trading and therefore you want to try and put on as many trades as possible, build up that account as quickly as possible, etc. Now, that can lead you into trading into unfavorable conditions, as we can see on the chart. So this is the price action over the weekend, as it usually is. So from Friday evening till Sunday morning, as you can see, very choppy, very sideways, no real trend at all. Now, one of two things is going to happen in this environment. You're either going to get death by 1,000 cuts by constantly getting stopped out because the market keeps reversing and flip-flopping direction, or you're going to enter a trade and sit in it whilst it goes sideways for 2 or 3 days, which is not going to be very beneficial, and it's going to take its toll on you mentally. So as we've discussed in this video, you want to be riding the trend, you know, getting in on the pullbacks of an uptrend, or obviously if it's in a downtrend, shorting the rallies, and stick to the plan setups that you've got via your trading strategy. Set and forget, walk away. If you get stopped out, your risk management should be on point where it doesn't matter. And if you hit your TP, hit your profit area, then happy days, you've got a successful trade, rather than sitting and watching this chop or getting cut up, as I say, death by 1,000 cuts, because price keeps flip-flopping. So hopefully you found the video useful. If you did, drop a like, and also drop in the comments below what you struggle with trading, or some advice for new traders that you might have. Hope you enjoyed, and I'll see you in the next video.